welcome to ETF Edge, your go-to place for all things ETF related. I'm Seema Modi, filling in for Bob Pisani, and there's no shortage of telling signals coming out of China over the last week as the world's largest economy remains on rocky footing between manufacturing data missing the mark, retail sales coming up short but still rising at their fastest pace in more than 2 years, not to mention major China tech earnings from the likes of Baidu, Tencent showing signs of life after a challenging 2022. So how are investors ready to play the reopening story? Let's ask three experts in the ETF industry. Brendan Ahern, CIO of Crane Shares, Will Ryan, founder and CEO of Granite Shares, and Todd Rosenbluth, head of research at Vetify. Great to see you both. Brendan, you've been watching these developments so closely. What are you seeing right now?
Yeah, we're seeing an incremental rebound from the Chinese consumer, Seema. It's not like turning on a light switch. That consumer confidence needs to grow after this zero COVID world. So we're expecting that Q1 will be better than Q4, Q2 better than Q1, and so on and so forth. That this slow incremental rebound as consumer confidence builds should help the consumer kind of come back. And we're actually hearing that from many of the companies that you mentioned in the management calls. They're speaking to how Q2 already is outpacing Q1, which outpaced Q4 of last year.
Let me bring Todd into the conversation. A handful of emerging market ETFs, Todd, have seen strong inflows lately, but do you get the sense that some investors are starting to siphon out of non-China EM bets from an overall emerging market allocation?
Well, yeah, we're seeing strong interest in emerging markets. Many advisors are telling us at Vetify that they're looking to reduce their home bias, add exposure to emerging market ETFs. So the Vanguard FTSE Emerging Market ETF, VWO, the iShares MSCI Emerging Markets ETF, EEM, that's seen some relatively strong growth and net inflows this year. And as Brendan referred to, China is still the largest market. About a third of the overall assets are tied to it. One thing that we're seeing that's interesting is Crane Shares recently launched a income-oriented version of their KWEB ETF. The ticker on that is KLIP, CLIP. And we're seeing strong interest in that. People are looking to reduce the volatility in their China-dedicated exposure, and CLIP is a great way of doing that.
Okay, let's talk about crude, Will, because prices have ebbed and flowed on these China headlines. What are you seeing in oil right now?
It's pretty lackluster, to be honest, at the moment, because the market is really suffering from this malaise around the debt ceiling. And I think until we get clarity around what's happening with that, it's going to be difficult to see an upside move in oil or most commodities, to be honest with you. But getting past that, crude, I think the story is really largely based around the forecast for China for the rest of the year. We saw some good numbers coming out of the country in March, but I think as you've heard from Brendan, that this coming from such a low base, the recovery there is not going to be a linear recovery. And we saw good numbers for March, but the Chinese consumer used to be, or the traveling class used to be the most lucrative in the world, pre-pandemic in 2019. That hasn't rebounded. Domestic travel rebounding, which is using or consuming a lot of oil. But we've yet to see that from the international sector. And I think it will come, but maybe just not yet.
That's a great point. Along that vein, metals and mining stocks have also lost their luster on deflationary pressures in China as consumer prices have slowed. We've seen base metal prices decline in the last few weeks. Copper prices down 12% from their January high. Gold has ticked up as the debt ceiling drama heats up here in the U.S. But Will, you run several big commodity ETFs like Granite Shares Gold Trust, that's ticker BAR. Give us your take on precious metals right now.
Well, really, the story is all about gold, and it has been this year because gold is the only major metal to remain in the green, firmly green for this year. And so we saw prices flirt with an all-time high. And that's largely to do with the debt ceiling because those will remember, back in 2011, when we had a previous issue with the debt ceiling and ultimately ended in the downgrade of the U.S. sovereign debt for the first time, we saw gold rocket to then a high. So, people looking for a hedge against that kind of event in this particular market. We know that, we've seen the yields obviously come down the short-term, appreciate in short-term treasuries, but I think gold is really serving its purpose at the moment as a way for people to park money in a non-correlated asset as they worry about what might happen, and certainly hedge themselves against the probability of something falling out of bed with the debt ceiling.
You know, Todd, it's interesting because commodity ETFs are still a popular trade despite this sort of uncertain global backdrop. So where are you seeing the most inflows right now?
So we at VettaFi have an Explorer tool, which looks at where the engagement that advisors are strongest. And we're seeing actually strong demand for commodity ETFs. It actually saw a pop in the last couple of weeks towards commodity ETFs. So Will talked about precious metals and ETFs like GLD from State Street and GLDM, which is a lower cost version of the GLD product, have seen relatively strong inflows this year. We're also finding advisors are interested in active management within the commodities space. So Will has a product that's there that offers that. Neuberger Berman has an ETF, the Neuberger Berman Commodity Strategy ETF, NBCM, is another way of getting a diversified exposure to commodities. So gold may not continue to be in favor forever in 2023, and so investors might want the benefits of active management to rotate, and NBCM is one of those examples ETFs.
Interesting idea. Brendan, on another note, the G7 summit wrapping up this weekend. What's the investor takeaway?
Been positive, Seema, that one of the major headwinds for investors in the China space has been the U.S.-China political relationship. And President Biden noted that he expects the U.S.-China relationship to improve very soon. I mean, just this week, China's Ministry of Commerce will actually visit Washington, D.C., meet with U.S. Secretary of Commerce Gina Raimondo. This is the first significant meeting on U.S. soil from a Chinese diplomat in probably about 5 years. So you think about, just as relationships, you had COVID babies because of being stuck at home. You also had COVID divorces. And I think the U.S.-China relationship really did suffer by the lack of travel from senior diplomats between the two countries. And we're taking a small step this week to improving that relationship, which hopefully just improves further.
Okay, well, lastly, Inside ETFs is hosting its annual conference in Hollywood, Florida this week. The conference just kicking off yesterday, and Brendan Ahern is there in the midst of all the action. Brendan, any key takeaways yet?
Well, it's been a great event thus far. I mean, we're stuck inside during some great, beautiful Florida weather, but outside of that, it's been a great opportunity to connect with a whole element of the ETF industry, as well as a lot of end users, a lot of financial advisors, registered investment advisors here. So thus far, it's been a great event.
Todd, I would love for you to weigh in here. Does what Brendan mentioned resonate sort of with what advisors you've been speaking with are saying as well?
Yeah, so advisors are increasingly engaging with us and our partners with fixed income ETFs. We've seen the strong inflows. I mentioned the VettaFi Explorer tool earlier. We've seen corporate bond ETFs in particular stand out. And I think advisors are increasingly looking for income that isn't just a safe haven from treasuries. So we think that's going to be a popular topic down at the broader conference, and advisors continue to look for alternatives within the fixed income ETF lineup. Makes
sense. Great to see all of you. That does it for this week's ETF Edge. I'm Seema Modi in for Bob Pisani. My sincere thanks to Brendan, Will, and Todd for joining us today. And thank you all for watching. You can find all of our latest videos right here on our website, etfedge.cnbc.com. We will see you next Wednesday. Have a great week.
Get the ABCs of ETFs with the ETF Edge newsletter. Your weekly update on the hottest trends, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.